Are you thinking about investing in crypto? Here are 3 questions you should first ask yourself. But before we get to the 3 questions, the content in this video is for informational purposes only. Any opinions expressed are solely for entertainment. It is important to do your own analysis before making any investment. Cryptocurrency, once an obscure corner of the financial world, is going mainstream. Investors considering crypto are likely to encounter a world different from what they've seen in traditional finance. Prices can fluctuate wildly amid rapid trading. Despite the complexity, experts following the sector say the approach to investing in cryptocurrency isn't so different from other investments that have a high-risk profile. Don't invest money you can't afford to lose. Make sure you've got your other financial bases covered. And remain patient. Most of the information that people come across is about crypto trading. That's about how to buy the next hot crypto. Crypto trading is about how to identify the next coin that's going to the moon. Crypto investing is very different. It's about buying something that has some fundamentals that you think are going to have value over the long term. If you decide to buy crypto, you need to know that it belongs in a cluster of relatively risky assets and should make up a small percentage of your overall portfolio. -5% to 10% is a general rule of thumb. Don't invest in cryptocurrency before meeting other goals for both short and long-term financial health. Investors should extinguish any consumer debt and make sure they're investing enough to get their employers matching contributions to retirement accounts such as a 401k. Beyond that, buying into crypto doesn't require a substantial financial commitment. Some online exchanges allow customers to buy in increments of $1 or less. So, one way to get into crypto is to just put aside a few dollars per week. Crypto exchanges have made buying, holding, and selling easier. However, if you don't want to delegate the security of your funds to the operators of the exchange, you'll have to do some research into how digital wallets work and which one is best for you. It helps to understand what blockchain technology is, how competing products are using it, and which ones have a shot at success. There's a lot of hype around cryptocurrencies, which means investors should have their eyes open for red flags. This industry is riddled with coins that have no use case and in many instances are actual outright scams, meaning that they're just people that are out to get your money. The trick is to find the true innovators. While you might not need a background in coding, it's worth the effort to look into how a cryptocurrency can be used. One way to do this is to read the white paper, an often technical document laying out how a network will operate. Bitcoin, for instance, is built to be actual digital money used as payment for goods and services. Ether can also be used as payment or to compensate users who help run the Ethereum network. The network is built to execute smart contracts that can be settled automatically when certain conditions are met. Also, look at how the supply of a cryptocurrency is distributed, including whether there's a maximum supply that can circulate. It might be tedious, but they'll certainly give you a major spotlight into what's going to happen with the price of the coin over time. There aren't many options within the cryptocurrency space that are comparable to mutual funds or other investment vehicles that give everyday investors broad exposure to many assets. And all cryptocurrency faces one inherent risk. Blockchain technology is pretty new, and no one knows for sure that it will deliver the economic benefits that its supporters are counting on. Any investment in any crypto asset out there is a bet on the future that transactions, assets, and information at large is going to be increasingly stored and transmitted on an underlying blockchain. Even if blockchain meets the expectations of people investing in the field, there will still be cryptocurrencies that don't pan out. Distribute your investments among several assets that you believe have long-term potential. In addition, some exchange-traded funds focus on companies working on blockchain-related endeavors. Investors may also consider the stock of companies in the cryptocurrency industry, such as Coinbase. Regardless of how you approach cryptocurrency, investment diversification should be considered across your entire portfolio, and alternative investments like crypto should typically comprise only one small part of that. That does it for this video. If you found this video helpful and want me to continue sharing with you other crypto news, then let me know with a comment below. And if you haven't already, please consider subscribing and enabling alerts for this YouTube channel so you'll be notified when the latest video is released. Thanks for watching.